Friday, May 17th, market analysis. Stan Ehrlich, good morning. Stock market indexes we'll cover first, and then futures markets using both NinjaTrader and TradeStation. The E-mini is just barely hanging on here. Did make a minor new low than yesterday's low. Yesterday was very interesting. We made a new high for the whole trend, but the closing price was below the open as well below the previous tops, which was only on Wednesday of this week, just the day before. So we are now toying with historical highs and a possible double top formation. So far, I'm not convinced, but I'd like to see this market start to make lower lows today, sooner the better, and close on a fairly soft note, and softer the better, to look a lot more like a double top. We're overbought for the last 2 to 3 days. Classic combination, overbought conditions, resistance area, possible double top. I'm missing a bearish engulfing for an official sell signal. We've got a little time left. We'll see what happens. Next chart is the short-term E-mini June futures contract 1 minute. As you can see, we just made a few minutes ago a very minor new low for the day, and it popped back a little. I'd rather it stay below 53.26 and just start slipping off. But even if it does get a little above that, it's not necessarily going to ruin my bearish expectations. Okay, Spider still has a gap to close a couple of days ago. That's an incentive to go back down. For the last couple of days, we have been in new historical high ground for the SPY. And you got to admit that could be a breakaway gap to the upside, not necessarily an exhaustion gap. A little hard to say at the moment. But if it does turn down, it's going to look a lot like a double top also. Now, these double tops are a lot more bearish than I would really like to expect, but we'll get to that later if things start to get weak here on the downside. The Spider 5-minute chart. Again, 15, 20 minutes ago, made a minor new low. Next chart, QQQ. A little lower than where it opened, a little lower than yesterday's low, not particularly dropping down very fast. There's also a small gap to close between Tuesday's high and Wednesday's low. But that's now, like the other index I just showed you, coming back down to previous tops, which is support. So if it does not hold, when it closes that small gap at 446.5, and that keeps on sinking, that can be pretty bearish pretty quickly. On the other hand, that is a relatively classic spot for it to stop going down. I don't want that, but I know what might happen. Next chart is the QQQ 5-minute. Doesn't look particularly weak to me in any profound way. And we're going back to the NASDAQ daily data chart. Same story here. Yesterday's high just barely poked into new high ground for the last few months. Possible double top again. Overbought conditions again. Next, NASDAQ 5-minute. Slipping off toward the end of yesterday and not really doing much so far this morning. A little higher, lower. Down a little at the moment. Okay, Russell. Historical daily data chart shows the Russell is in a major long-term resistance area that goes all the way back to April of 22, 2 years. So I don't see it having a problem of stopping up here again. We are right in that zone. I don't expect a really big down move, on all of these downside corrections I'm looking for. And I don't expect it to last very long either, maybe 2 to 4 weeks. And then in a new high ground again. I just want some sort of correction. I think we're primed for it. And we'll look at the Russell real quick, the 1-minute chart, nothing here, sideways. Now, bonds. The YM, I'm sorry, Dow futures hasn't even made a new low high today and opened a little bit lower. And at the moment is high and last. But yesterday's high didn't quite make those new highs like some of the other indexes did. Still the same approximate situation, double top possibilities and overbought conditions. Next, YM short term, 1 minute, at the high of the day right now. Also in a general area of very minor resistance, just basically yesterday's range. Bonds. We poked the top of the trading range, which is a downward slanting channel yesterday, managing to get above the top of the channel, but the closing price was smack dab at the top of the channel. Today, 90% of the price range is below the channel again, and we are currently almost low and last and sinking. If that keeps up, it's going to be bearish for the stock indexes, I think. 10-year notes, pretty much the same story. Yesterday's high and Wednesday's high were right up against a little yellow resistance line. That was previous lows that held, and then on the way back up, they stopped rallies, and it may have done it again yesterday and Wednesday. We're down low and last, and we may start to get back inside that channel again. It's only a minor amount of ticks lower. Next chart is soybeans. As you know, we had a buy signal on April 19th at the very bottom of the market. That's the second low and a broad double bottom. A lot of doubles around these days. And we're high and last at the moment. Looks like we're going to have a new high close and maybe even a new high for about a week. The downside dip out of overbought conditions seems to have come to a halt, and now I think we're better ready to start to make new highs again. So that's 1 out of 5 grains. The Ehrlich reversal has 4 bottoms that it's picked out of the 5 grains. You saw the beans a moment ago. Soybean oil did not have a bullish engulfing ER buy signal at the very bottom, but I can justify the possibility of a head and shoulder bottom that's very large here. This is a 2-year pattern. It turns out to be extremely bullish. The head of the formation is May of 23. Now today we're rather strong and adding fuel to my commentary because we're making new highs for a couple of weeks. I'm moving up away from that last shoulder low in a support area after having been very oversold. I gotta love this. I started talking about it a couple of weeks ago. So far now it's looking a little bit better. What's the next rally stopping point on the way up? Oh, about 50-50, 50.50. Yeah, that's good enough for the moment. There's going to be a little trouble. Maybe, yeah, it's already there around today's highs, but I don't think that's going to last. Next chart, we bought the bottom of the market on February 29th for soybean meal. It's already had a huge rally, breaking out of a very minor little double bottom that was at a very important support area historically. And meal's kind of leading the way up. So I like what I'm seeing here. Downside correction starting to hold at my yellow support line. And that's been for several days. Right now, nothing big, just barely higher. Even if it breaks this minor support, it's not going to go down too much. Maybe at the most, I think 347, and then continue on the way up. All the grains I'm liking, even soybean oil now. Corn, we bought the bottom of the market on February 26th. This is a downside correction nestling its way back into a little support area right in here. I don't want it to go below these lows, 435. That could be fatal as far as a longer-term uptrend developing properly is concerned. Next is wheat. We bought the bottom of the market on wheat March 11th. We also had a bullish engulfing the previous day as well. So there's 2 at the very lowest lows. And it sort of double bottomed out also past tense and has been leading the way up with meal. We did get, for the first time, Wednesday, a bearish engulfing ER sell signal officially. So now I have to be bearish for the moment. We are starting to go down. This is a minor new low since the signal on Wednesday, a little lower on Thursday, and now a little lower again today. Good. Starting to get close to a minor support area at 647. Is the bottom formation stronger and going to continue to be a bull market despite the sell signal? Can't say now. a little bit lower, begins some support 647. I said, okay, let's see what happens if we dip down there, and it could be, well, even today, but very, very soon. All right, well, now we've got cattle, new highs. Finally, I decided up, and that was a few days ago, and it's been coming along okay. Next resistance area would be around 180 to 181 and a third. This has been a big, big trading range that started to develop. You could easily draw a major bear trend line across these highs, but we're not close to it. And now a bull trend line across these lows, and we're moving well away from that bull trend line as well. A giant pennant, if you want to visually see that. And the next is hogs. The head and shoulder top is working great. I talked about this before. It broke out to the downside, probably in the ballpark of commentary starting to be April 25th, maybe even a day earlier. But right in there as that shoulder started to roll down, that's when I start to notice things on head and shoulders. But anyway, new low close likely below previous lows, except for yesterday's low, and then we can still do that. We're close to being oversold. This could dribble off a little bit more. My minimum downside objective is 92.80, and it has been since the official breakout. You know, I don't know. Let's move that just a little bit over here. You know, I'm a little bit slow to, okay. Now I got a very minor adjustment because the actual breakout day was the close on that day, way down, a large, big break to the downside. This is a false breakout, crossed the line, closed at the high of the body above the neckline, and stayed that way for one more day. Kaboom. So raising the downside objective just a little bit as a result. I'm going to call it now 93.10, 93. Big deal. Next, and we're back to the E-mini in TradeStation. I meant in NinjaTrader, 53.21, just barely sticking around unchanged. Very strange, very strange. Okay, now for some gold, silver, and exotics. Crude oil as well, upper left-hand corner, now full screen in TradeStation. We had a buy signal a few days ago, May 8th. It didn't work quite that well. We made a new low several days later, so we had a very minor profit potential, probably a small loss. But it still looks like it's trying to bottom out. A little bit more strength and you got a breakout. So I'm starting to get friendly here on crude oil. But the problem is that head and shoulder top that formed, this shoulder and the head, and then this over here, the shoulder, has not reached its downside objective of 74.45 yet. I got over halfway there, about 2/3 it looks like. And I still think that's an objective to keep your eye on. So we might stop right in here, a little tiny bit of resistance, and flip-flop right back down. On the other hand, I could allow a little bit more strength as long as it doesn't go above that neckline. Let's pull it over here a little bit more, and like that. Okay, next chart. Wow, big up day in silver, big rally. Super overbought, 90. Nothing else I can say here. It looks like a little bit of a blow off top with a very overbought condition. The last time we were overbought like this, it did go up a bit more. And then the downside correction wasn't all that big. We bottomed out at oversold conditions. Gosh, I got to be bullish, but it looks like too much too quick at the moment. Probably a little bit of a pullback very soon to 29.30 and then maybe up again. Wow. Okay, natural gas, very strong, new highs for quite a while, now the second day in a row. Now in overbought condition, 83, and that's pretty overbought. So I'm kind of expecting maybe one more day up, if maybe. There's a chance that the 2.989 is going to stop the rally, but that may be too much too quick now. I think it's going to stop rallying very quickly next day or two, below 2.897, somewhere between now and there, and turn down. We'll see what happens after that. And here we go with heating oil. Now, after being oversold, catching on a little bit, rallying new high for a couple of days. This is important. The low that we made on a spike bottom and oversold condition just this Wednesday is right at the same low levels that we saw early January, the very beginning of the year, as well as in December. Plus, you can trace that level back all the way into a bunch of highs in May, June, and July of 23. That deserves a support and resistance line. I'm not going to put one there right now. That's pretty important. We're bouncing off a significant support in oversold condition. I'm turning bullish. Two buy signals that didn't work, but sometimes they're part of bottoming out formations and not necessarily the lowest low like we had over here. Bingo. And one before and one after as well. And sell signals smack dab on top. All right, so gold. Maybe double top, not quite overbought. I think it's going to punch in a new high ground. Yeah, I guess so. Next, platinum. That's exactly what platinum's doing right now and has been for a few days. Very strong precious metals now. What about copper? It's still got ants in its pants. Look at it go. New high, almost. New high close, probably. Not terribly overbought, but I mean, 81's not to be forgotten. Every time we've gotten up to this area approximately lately, we have had some sort of correction, albeit in some cases pretty small. And then the bigger ones were still kind of small. We got one decent sell signal that lasted only a couple of days. Wow. Okay, copper looks like it could flip back down again, but the trend is not necessarily changing. And we're getting to orange juice. Again, super overbought conditions, 93. That doesn't look like inflation's under control. New highs, new high close, contract highs, previous big pennant formation ripping out of it on May 9th, beginning of this month, and boom, overbought and staying there so far. Yikes. I can only say I expect a correction, maybe back to 382, and then maybe totally a new high ground again after that. Now, this broad head and shoulder top in sugar is still doing fine. It's pretty big. This is the only one that's got a long-term bearish outlook at the moment. All right. Sloping up, double shoulder, back here in May and June of 23. A rolling, relatively flat top starting in September going to November of 23. Then we have a slightly downward sloping double shoulder that is approximately the same time frame and relatively symmetrical with the one on the left. This looks good. The neckline is downward slanted slightly, not a lot. That's pretty normal for a lot of head and shoulder top formations. And when the market broke out of the neckline just the beginning of this week, it came back up, touched the line perfectly, which is a little quick to do that, but it didn't go above the neckline. It stopped cold turkey right at the neckline, and it dropped right back down on Thursday. And today looks like a new low close for the trend. The minimum downside objective is 1350. So far, nothing wrong. Next, cocoa. Probably about to break support. A little double bottom developed. The bounce just couldn't hang in there. You've got a really big divergence top up here. That's nice after the fact, but I'm sure I said something about the overbought conditions and divergences when they were happening. I'm looking for a break below 6,996-ish. And another sharp leg down after that, and it could be very soon. And we got coffee. Okay, minor upside breakout at the moment. I suppose they should be modestly friendly for the moment, but I can't help myself. It looks like this thing just might fail on a small retracement, maybe a 50% rally, somewhere around 218-ish. And there's a little resistance at 1980, 219, call it 220. And we're 206 and third. But that's about it. That's the best I can say at the moment. Maybe we'll get up to 220 and then pull back down again. Lastly, cotton. Bullish engulfing worked for only a day or so, a couple of weeks ago. Then we have new lows on Wednesday. It came back to close fairly firm. So we got a little follow through yesterday, but not much. And today we're dipping back down again. The big question is that new low not going to hold? I mean, it did act like a ping pong ball being out of, pushed underwater, popped back up again, but we're failing today. But it's a doji, inside nothing. So the key here is, are we going to start closing below 73.70? Then you got another big leg down, probably a big leg down. Oh yeah. Probably down to 70. Next chart is back to the E-mini June, and we are finished. Thank you very much. Have a great weekend. Some interesting things developing here. Keep your eye on the indexes, and if they get weak, we start to slip some more.